Namaste and welcome. Part B of cash flow. We will be taking up one more illustration. This is an illustration based on the question that appeared in December 2019 exam. Let's get going. Here the amount is in rupees lakhs, but there are no adjustments indicated in terms of any additional values. Method of operating cash flow calculation. It can be direct or indirect, but nothing specific mentioned in the statement. Hence, we can go with our standard format of indirect approach for cash flow from operating activities. We will keep the template standard: cash flow from operating activities, cash flow from investing, cash flow from financing, net increase, and in case of operating, we have got non-cash and non-operating items and working capital margin before we make the payment of income tax. This problem or this illustration is quite simple because there are no external adjustments in this case. This is only a matter of matching the slots and shifting. There are only two adjustments, one pertaining to loss on sale of assets and second pertaining to profit on sale of investments. Whenever loss on sale of asset or profit on sale of investments or the reverse happens, we have to take a combination of that because cash flow is equal to these two together, because that is what the cash you receive. We will look into that. Getting further, opening balance of net profit as derived from the profit and loss account is 35,500. We place there. Next item that comes is dividend. In this case, dividend is only dividend paid. This is cash flow. This is not a charge in profits. Therefore, it will have to appear under dividend paid as cash flow under financing activities. We go further. 10,000 is shown as outflow. And that leads us to take the second item, provision for income tax. You have to note these two things. Provision for income tax is appearing in the profit and loss account, whereas income tax paid during the year, it will be coming under payment of financing activities. Let us take provision for income tax. Provision for income tax, it was deducted from profits before. Now it will be added 7,500. Income tax paid during the year is 6,300, which we will be showing as payment here, 6,300, which is paid, and that takes us to loss on sale of assets, 60. This has brought down the profit by 60. Now we have to take it back and add 60 rupees, 60 lakhs. And next item is book value of assets sold. This is where we were telling, when there is a book value and there is a loss, the cash what we receive will be cost less loss. 250 minus 60, 190 is what is the fixed assets realization, which is nothing but cash flow which will be coming. We will be putting it here under investing activities. And coming back, there is depreciation. We have seen whenever there is depreciation, first we will remove it from the operating activities because it is a non-cash expense. It has to be routed through fixed assets account. But in this particular case, we will not be preparing a fixed assets account because if there are more items missing, we cannot make use of a fixed assets account. It can only when we need only one missing item, we can prepare it. Based on the details, it looks we might not need a fixed assets account. We simply pass an entry for reversing 30,000 from the profit and loss account. We add that 30,000. Then comes profit on sale of investment, which is inflating our profit. Now we have to remove it. It has to move to investing activities, and therefore its place will be profit on sale of investments. It will be deducted, just like we saw in case of assets. We said loss on sale of assets 250 and 60, 250 minus 60. In case of investments, they say the cost of the investment that we sold was 40,650. We made a profit of 150, means we have made 40,800 as the receipts on this account. Therefore, sale of investments will be 40,800, which will be coming here as cash flow. And that takes us to interest expenses and interest paid. Interest expenses is a reversal from operating activities, and interest payment is a payment of interest from financing activities. We will take that further. 50,000 added back to profits and 15,780 to be deducted as a payment shown as a cash flow. And thereafter we come to increase in working capital, a single item that has to go to the proper head. Increase in working capital 84,100, and here we strike the subtotals because that covers most of the items of operating activities. Then there is purchase of fixed assets, a simple straight transaction. It is a cash flow. 840 is going out as a payment. Then that leaves us with all subtotals from cash from, because after 840 what is left is opening balance and closing balance of cash. We strike subtotals for all other transactions, working capital changes, cash generation used, income tax paid, and net operating cash flow is minus 2,490. From investing activities, we have got 40,150, and from financing activity we have got an outflow of 25,780, 2,490, 40,150 minus 25,780. Our net increase in cash and cash balance during the year is A plus B plus C, coming to 11,880, and opening balance was 1,032.5, means our closing balance has to be 1,032.5 plus 11,880, and as you will see, the total closing balance will be 12,912, being the total of these two, that is leading from top: profits, adjusting for operating cash flow, investing cash flow, financing activities, all the put together opening balance 12,950, and this is what we are looking for. 12,912.5 is the derived from the cash flow, and as per our statement of balances 12,950, and both of them have got balance properly corrected, and that proves that the cash flow has taken care of all the items with the proper placement under the three heads, and that matches with our requirement. This is almost a simple illustration, but acquaints us with two special items of when there is value of investment and profit, and when there is loss on sale of assets and also book value of assets sold. And one more thing which we saw here, when there is just a dividend payment, it will not touch the profit and loss account, it will touch only the cash flow. And income tax, provision for income tax, and income tax paid. And this is a wonderful example. Hope you enjoyed it, and all the very best. Thank you so much. Thanks a lot.